Real estate investment trusts, commonly known as REITs, can be an excellent way to add income to your portfolio without adding too much risk. But there is no such thing as a perfect investment. REITs have pros and cons, so let's go over the main points of REIT investing. REITs are regulated investment vehicles in real estate where investors pool their funds and invest in a trust to earn profits or income from real estate as beneficiaries of the trust. REITs source funds to build or acquire real estate assets that they sell or rent to generate income. The income generated is then distributed to their shareholders at the end of a financial year. These real estate assets include office buildings, apartments, shopping malls, hotels, resorts, and warehouses. A brief history. REITs originated in the United States initially to overcome restrictions on collective real estate property ownership. After World War II, the need for large sums of money to invest in real estate renewed interest in the more extensive use of the Real Estate Investment Trust. The US Congress gave real estate investment trusts their first stimulus in 1960, with the intent to form a pooling arrangement that was needed to spur investment by the private sector, in an era when private capital for land and housing was scarce. In Africa, Ghana was the first to implement the REIT structure in August 1994. This was followed by Nigeria, which launched in September 2008, then South Africa in May 2013. In Kenya, the first REIT was approved by the Capital Markets Authority in October 2015. However, despite South Africa only having been launched in May 2013, it has proven to be the most successful REIT market in Africa. A REIT is thus an entity that aggregates the capital of many investors to acquire a portfolio of income-producing properties. A typical REIT structure includes 4 key parties, namely 1. The promoter. The promoter pools all resources to structure a REIT. 2. The manager. The manager is tasked with the role of allocating funds to the real estate assets that yield a favorable return to the investors. 3. The trustee. The trustee's role is to act on behalf of beneficiaries, usually the investors in the REIT. 4. Property manager. The role of the property manager is the management of completed real estate developments acquired by the REIT. There are 3 main types of REITs. 1. Income Real Estate Investment Trusts, or IREITs. This is a real estate trust that primarily derives its revenues from rental properties. The investors gain through rental income from capital appreciation from the investments undertaken. 2. Development Real Estate Investment Trusts, or DREITs. This is a real estate trust where resources are pulled together for purposes of developing real estate projects. Once a development has been completed, a DREIT may be converted to an IREIT. However, a minimum investment of 5 million Kenya shillings is required for an investor to qualify as a professional investor. 3. Islamic Real Estate Trust. This is a unique type of REIT that only undertakes Sharia-compliant activities. Its primary objective is to invest in income-generating real estate segments. In Kenya, REITs are structured as trusts rather than limited companies. This means that the properties are held in the name of a corporate trustee who is the custodian of the REIT assets but are managed by a corporate REIT manager. There are currently 10 REIT managers in Kenya, namely Saiton Asset Managers Limited, Acon Investment Management, Stanlib Kenya Limited, Nabo Capital, ICA Lion Asset Managers Limited, Fusion Investment Management Limited, Housing Finance Development and Investment Limited, Sterling REIT Asset Management, Britam Asset Managers Limited, and CIC Asset Management Limited. Currently, Kenya has only one listed REIT, that is, the Stanlib Fahari IREIT, which started trading in November 2015. For the individual investor, a REIT is quite a convenient structure since the investor does not purchase the physical asset but purchases trust units that give the investor access to the trust's cash flow from the rental income of a pool of revenue-generating properties. Before we dive any deeper, let's talk about taxes. The advantage of REITs is that they are exempt from double taxation. That is, REIT schemes are exempt from corporate tax and income tax. Income tax. This is a direct tax imposed on income derived from businesses, employment, rent, dividends, interests, pensions, among others. Corporate tax. This is a form of income tax that is levied on corporate bodies such as limited companies, trusts, and cooperatives on their annual income, which is currently at 30% per annum. However, for a REIT to qualify for this, it must distribute at least 80% of its earnings to investors. REIT holders must account for withholding tax on interest income and dividends. Thus, upon distribution of profits, investors are subject to withholding tax at the rate of 5% for residents and 10% for non-residents. Other taxes to note. Transfer of properties to a REIT also attracts a stamp duty exemption as per Section 96A of the Stamp Duty Act. Capital gains tax must be accounted for in the event of gains from transfers or redemption of units from a REIT. REITs are income tax exempt if they comply with the REIT regulations. They also must remain registered with the Capital Markets Authority and the Commissioner of Taxes. As always, make sure you stay updated with the tax information. The government can and will amend taxes from time to time, especially now when a budget and finance bill has been presented to Parliament that seeks to amend taxes in the country to fund the 3.6 trillion budget. Stay informed. REITs, like any other venture, have shortcomings. They include 1. High minimum capital requirements for a trustee, which is currently at 100 million Kenya shillings. This limits eligible trustees to only banks, thus eliminating corporate trustees and fund managers. 2. Lengthy approval process which discourages promoters from pursuing REITs. 3. A high minimum investment D-rate amount, which is currently at 5 million Kenya shillings. This is 100 times higher than the median income in Kenya, which is 50,000 Kenya shillings. And 4. Inadequate investor knowledge, hence low investment in the market. Kenya has only one listed REIT, that is, the Stanlib Fahari REIT, listed on the Nairobi Securities Exchange, which started trading in November 2015. However, the Fahari REIT's performance has been on a downturn since November 2015 when it was first listed, a decline of more than 60% from 20 Kenya shillings in November 2015 to 5.92 Kenya shillings as of 31st April 2021. Currently, we don't have any listed D-rate. However, there were attempts made by Fusion Capital D-rate, which was launched in November 2016 but failed due to low subscription rates, and the Cyton D-rate having failed due to conflicts of interest by the prospective bank trustee. You can buy REITs either by purchasing shares through a broker or directly on the Nairobi Securities Exchange. You can also purchase them on any other major exchange if you're looking internationally. REITs can also be purchased through a mutual fund or exchange-traded fund. Buying REITs through a mutual fund can be done by investing in a fund that specializes in real estate or has REITs within its portfolio composition. Conclusion. REITs are a good investment option as they provide investors the opportunity to participate in real estate projects. They offer investors liquidity, portfolio diversification, and strong corporate governance. REITs are still at the initial stages for Kenya, with only one being listed, that is, the Fahari REIT. One of the main factors affecting the performance of the REITs market is minimal investor knowledge of the instrument. However, the REITs market in Kenya has a potential for growth with increased government support and public sector sensitization of the REITs. That brings us to the end of the video. In the next one, I'll dive deep into the stock market and which methods you can use to pick the right stocks. Hit the like button and feel free to share with your friends who may benefit from this video. That's it for now, and thank you so much for watching.